Moving on. We've experienced record-breaking volatility in the stock market this week. Most experts pointing their fingers at China for the wild swings in the market. But my next guest says ETFs share some of that blame. Joining us now is Palisade Capital Management CIO Dan Veru. And by the way, all credit to Dagen McDowell sitting on this set when this was happening. She brought this to the attention of our viewers. It became Wall Street Journal. The next morning was on the story, but a lot of people talking about this. Dan, can you just kind of simply set up what's happened here and why this has become such an enraged conversation?
Well, first of all, ETFs on a dollar traded basis annually now exceeds the GDP of the United States. Wow. You think about that for a second.
Nuts.
Okay. So they're the most popular instrument. Everybody thinks you can make a market opinion very, very cheaply. But in my opinion, you get what you pay for. So what's happened now is they so dominate. So it's so easy and almost without thought to make an enormous change in the stock market, either a sector call or what.
So the market plunges 1,000 points Monday morning on the open. What happens in the ETF market?
So what happens is they get these enormous sell orders from the ETFs. The ETFs have to go in and unload at any price the shares to rebalance their portfolio to reflect the amount of orders they're getting on the individual ETFs themselves. You're going to have correlation breakdowns. That's why you're having these halted trades in a lot of the ETFs as well, because they can't rebalance the portfolio.
Okay, I'm going to ask a simple question because Dagen's going to jump in here. Is there going to be like lawsuits? Did something happen illegally? Did something not happen that the owners of the ETFs promised didn't happen?
Well, I read it's complicated, but what happened was when the Dow fell 1,000 points, some of these ETFs, some of the biggest ETFs in the country, multi-billion-dollar funds, were down the equivalent of a 7,000-point drop in the Dow. There was this vast mispricing. The market makers in these ETFs couldn't price the underlying, the actual basket of stocks the ETF reflects. They stepped away, and they said, we're going to offer what we were willing to pay for a share of ETF. We're going to make it really high, and a sell offer is going to be super low. Yeah. So you had these ETF shares that were down, and I'm talking about 1 out of 4
and these
stock
were baskets
ETFs.
Of stocks like everyone knows, Coca-Cola, Johnson & Johnson, Dow components.
And ones that were supposed to be like low volatility ETFs.
They were low volatility dividend funds. These funds have been sold to many individuals. Right. For their ease of trading, but they are mutual funds. They're baskets of stocks. They were down 30, 35, 40, 50%. Can you imagine having we can get into it later, but I've talked to the fund companies. It looks like, based on my reporting, these trades are not getting canceled. Yeah. It's T+3.
So where does this go now?
Settled today.
So here's the other problem, and you hit on an excellent point, because there's so much lack of transparency now that the specialist system no longer exists. Because I can tell you, if I'm in Jamie Dimon's shoes, for example, and I watch J.P. Morgan close at 61 and open at 50.
Just so our viewers keep up with this. So you're saying there's problems because the specialist, the guy who sits on or stands on the floor of the New York Stock Exchange, who's responsible for opening these stocks.
That's correct.
You're saying because he's gone away, this is causing a problem.
He manages the bid-ask spread that Dagen's saying is blown out.
I can guarantee under the specialist system, no specialist would have allowed the stock to open at $50 a share. He would have made a more realistic market for where the shares should have been. And if he did, Jamie Dimon's picking up the phone, calling the New York Stock Exchange and saying, I want to speak to the specialist. I want to understand what the justification was. I want to see the order book. Yep. What are you going to do now?
I can tell you I used to do that often.
Who do you call?
That's right.
I used to do that often. And I mean, that was just a few years ago that I was sitting on the trade desk and you would physically pick up the phone and call the specialist. And ask them what's going on in that name. Now, who are you going to call? The computer?
Isn't this the most basic accountability that Wall Street ever created, which is a bid-ask spread and a person on the floor or a person on the desk that has to answer?
Yes.
Not only to their boss, but to the customer.
The SEC believes that high-frequency trading and the high-frequency lobby immediately came out and said, we did a great job by injecting liquidity into the system.
Well, it did. It did. Do you argue that point?
Well,
the liquidity has helped the retail investor.
I actually completely disagree, because I can tell you, as a buyer and seller of billions of dollars worth of stocks annually at my firm, it's functionally legalized front running, because we go and we see an offer at a certain price and we think we can buy shares there. That offer disappears right away, and then you have to walk your stock up higher because they see these orders coming in microseconds and can adjust the prices very, very quickly.
The message from the ETF business and the ETF industry, based on everybody I talked to yesterday, is essentially don't trade ETFs at the open. Don't put in sleeping stop orders that you will get killed, that know when the market is, and place limit orders. I'm reading from an email.
So where is the liquidity if you can't do that?
I had a few people tell me, don't trade ETFs at the open or the close. Don't put in stop orders that turn into market orders because you're going to get filled at this horrific price. So, and that's what happened. Are these trades going to get reversed? Every indication is absolutely not.
So wait, this is one of the ETFs that we're talking about here, right?
Yes, that was one of the hardest hit. That is a multi-billion. Now, we shouldn't show the TLT. Don't show the TLT.
That's my baby. Get that central planning.
That's what happened to the TLT on Monday.
Next.
The SDI is a multi-billion-dollar ETF, and that was one of many, 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 many funds where you had these pricing aberrations.
Okay, we're talking about stocks where you may not like the price, but you get price discovery at a price and you get liquidity at a price. Okay. Think of all the ETFs that have gone into all esoteric asset classes, less liquid, bonds, those things. Now, I'm not talking about the TLT or treasuries or anything like that, because it's the most liquid market on the planet.
Hold on. We don't have that much time left, and I want to move this forward. What happens now? Is there going to be changes made to the way the ETFs are set up and trade? No. Is there going to be any lawsuits? Where does it go now?
I'll tell you what will change, though.
Market structure rule changes by the regulators down the road on how they're traded.
But even Dagen, beyond that, I really think we're seeing the beginning of the correlation breakdown of ETFs. They've gotten too big. This has been a problem for firms like ours who are fundamental bottom-up research people. We've had the headwind of, on up days, all stocks are good. On down days, all stocks are bad. Stock picking didn't really matter as much. It's been a headwind.
To be fair, there would be a lot of people that I don't have the time to do it, but that would challenge a lot of what you have said right here as factually incorrect about what the high-frequency trading has done for the markets. So I just want to be clear on that.
I can tell you who was on the other side of those trades where the retail investors got, and it was high-frequency trading firms.
Ask them one question. Who are you going to call in the event of a dispute? Who do you call?
A lawyer.
I don't know.
Right.
That's what's going to happen. I'm not saying do that, but that's what's going to happen.
I could go so many different directions with that. I don't have time.
You call the central planners.
Oh, come on. Where is it? Ring that bell. All right. Well, we're going to have this conversation another day because, there's not enough time in the day. Dan Veru, thank you for joining us on set. Good conversation.